Well, hello, everyone, and welcome. This is Cynthia Tomain with Interactive Brokers, and we're very pleased to have you join us for today's presentation on how to pair technical indicators with market direction. Now, today's event is being brought to us by VectorVest, and we're very pleased to have Jerry D'Ambrosio, a senior instructor with VectorVest, to tell us more about these technical indicators. So with that, Jerry, I'm going to pass you the controls. If you would go ahead and share your desktop, we'll get underway here today. Thanks for joining us, Jerry.
Thank you very much, Cynthia. I'm going to go ahead and share my screen with you guys. Just give me 1 second till I get myself situated here. Great. Looks like you guys can see my screen. Of course, I want to do a quick sound check as well. Make sure everybody can hear me okay. Just if you don't mind, just using that chat box, typing in, sure, I can hear you. Sounds still good. And we'll get underway. There we go. Ken says, sounds good. Yep. Yes, yes. Hi, Alessandra. Nice to see a lot of familiar names in this webinar today. So we're going to talk about pairing technical analysis indicators with overall market direction, or in some cases, lack of direction. And technical analysis can help you pinpoint entries and exits, and it really does help you anticipate what is likely to happen in the future. And I want to emphasize that word likely, right? Because there's no guarantees in this game that we're playing here. It's all about likelihood and putting probability of success on our side, and technical analysis indicators do that. The people I've worked with over the years, they let me know some of the problems that they have when it comes to finding trades and using technical analysis just for trading in general. They feel like it's a crapshoot, especially with the market being, so up and down. I mean, it's been a great run since Christmas. Rally stalled out a little bit a few weeks ago, and we're going to come to a point again where 2018, especially at the end of last year and the beginning of last year, will come up again where it becomes very difficult to figure out which direction the market's going. And I said before that sometimes the market doesn't just move up in a nice consistent overall uptrend, or down in a consistent overall downtrend. You can make money on both sides. Sometimes it'll trade in a very narrow range. So it does feel like a crapshoot sometimes. A lot of people I've worked with say they just don't have the knowledge when it comes to trading. They say they just don't feel like they know everything when it comes to shorter term technical analysis, so they just avoid it. They say there are too many indicators with all these funky names, so they just say, you know what, I'm going to stick to what I know and just really forget about using technical analysis. Plus, when they do it, they just spend a lot of time going through chart after chart after chart looking for these technical setups. I know subscribers of ours that go through hundreds of charts just to find a few potential trades on that day. If you do that, it just leaves you very, very frustrated and pulling your hair out. So to put the probability on our side, I talked about that earlier, and that's what technical analysis indicators do. You don't want it to be a crapshoot anymore. You want to stack the deck in your favor. And while you might not know everything about everything, you're going to know a handful of indicators to use in different types of market situations. Plus, you want to be able to find your trades quickly instead of looking at hundreds of graphs, okay? The thing I discovered is that there are 3 areas that traders need to focus on to be successful. First is when, okay? There are different types of market situations. If 2018 taught us anything, it's that, right? There are going to come times where it becomes increasingly frustrating to maneuver through the choppiness, okay? So you need to know when to use certain indicators. Now, granted, there will be special situations and times that you might mix and match indicators, but we're going to talk about the main ones here today. So you need to know what types of markets there are, how to identify each, so you know what indicators to use and when. Second is what? Okay, so now what are the indicators? If I understand the market and what the market's doing, next I have to understand what the indicators are. And granted, there are dozens of technical indicators out there, but if you can focus on a few at first, it will help you tremendously. And then third, after you understand what the market's doing, Then you get a sense of, okay, what indicator is best used for this type of market that I'm in. Finally, how am I going to find these trades, right? How am I going to find these candidates? There's different methods. There's what we call the one by one method, and there are some faster ways. We'll talk about the faster ways as well. So with so many people doing shorter term trading nowadays, especially since 2015, I think it's important to be able to find your trades a lot faster. So I'm going to ask you guys a question, and I want you to use that chat box if you don't mind. What's the most difficult part for you about finding stocks to trade? And I'm going to take a quick drink, and I'm going to let you guys answer in the chat box, and I'm going to read some of your answers. What's been the most difficult part for you about finding stocks to trade? Alessandra says, not difficult because I use VectorVest. Okay, Alessandra is one of our subscribers. Fong says, using the right screening settings. I like that, Fong. Okay. Tom says, knowing when to exit. Narayan says, market data. Okay. Tom, big issue. A lot of traders have, knowing when to get out, right? Steve says, after looking at an up run, how to know if the turnaround is upcoming? Steve, that's a good one. Mark says, conflicting and untimely information. Imre says, entry and exit points. Okay, so a lot of different answers there. The first thing you need to understand, though, is when to use the indicators. So you guys are talking about exiting positions and entering positions, right? And that's all important, and we're going to talk about that. But the first thing you need to understand, excuse me, a little under the weather here. I hope I don't sound too terrible, is when to use these indicators. Now, there are three main types of market situations that we need to talk about. Okay, the market can do three things. It can trend. And we're going to look at each one of these individually. You know, you guys, if you're a chart reader or look at the market on, let's say, the S&P, and you like to read charts and identify trends, we're going to do that. We're going to look at some charts here in a moment. So the market can trend, okay? It can hit higher highs and higher lows, or lower highs and lower lows. That's a trending market. Then the market could enter into a situation where it no longer hits higher highs anymore and no longer hits lower lows anymore. That's more of a trader's market. It's an investor's nightmare, right? The average investor, buy and hold, or even more longer term, in a trader's market, it's a nightmare. You don't get anywhere. You make some money, you give it back. You make some money, you give it back. You're just kind of spinning your wheels in a trader's market. Then there are situations where the market hits extreme situations. Okay, either extremely overbought or extremely oversold situations. So let's first talk about each one of these philosophically, and I'm going to kind of walk you through it, each one. So what we're looking at here is a candlestick price chart on what we call the VectorVest composite, or VVC for short. A lot of you look at the S&P or the Dow or maybe the NASDAQ, if you guys are trading a lot of tech stocks, as overall market barometers. Well, what VectorVest does is we take the Dow, we take the S&P, we take the NASDAQ, we take the Russell, we take all the stocks that compose all of those indices, and we put them into one single market index, and we call it the VVC. It's our overall market index, and that's what we're looking at here. So in an uptrending market, as you can see, this is an uptrending market. The market hits higher highs, monthly, bi-monthly, hits higher lows, same time frame, right? Higher highs and higher lows. This is a nice, comfortable environment to be investing in. When you're in an uptrending market, you're likely to either be buying stocks or not buying stocks, right? It becomes difficult. If you know that you're in an uptrending market, it becomes difficult to short these rips, right? To short these pullbacks, because in an uptrending market, they're very short-lived. So what you want to do is you want to add to your positions and buy the dips in an uptrending market. Okay, now if it was a downtrending market, and I'm not going to show you a downtrending market, it would be the opposite. Right? If you followed my mouse, here's what a downtrending market looks like, right? Lower highs and lower lows. And in an overall downtrending market, it makes life difficult if you try to buy those lower lows, right? Because in a downtrending market, those rallies are short-lived. The rips is where you want to add to your short positions. So you just flip that methodology over on its head, and what we want to do is add to our long positions and buy stocks on the dips in an uptrending market. Okay? Now, same VectorVest composite chart we're looking at. Now, this is 2018. This is not an uptrending market, nor is it a downtrending market. This is more of a trader's market. Okay? The market does not hit higher highs, nor does it hit lower lows, right? Kind of moves in a channel, kind of trades in a channel. Sometimes it could be a narrow channel. Sometimes it can be, this is, we're looking at a 45, 25, a 48. So that's about, let's see, almost a 10% channel here. It's pretty wide channel, okay? And trending indicators, trending technical analysis indicators that you would use in a trending market environment, they tend to fail and don't work as well when the market starts to behave this way. Okay? Then finally, there are extreme situations. And this is now the end of 2018 into 2019. And in the VectorVest program, we actually have two indicators, two market analysis indicators that help us identify extreme situations. Okay? Not to get too deep into it, but when our MTI indicator, called the market timing indicator, goes below 0.60 and the buy to sell ratio goes below 0.20, we observe a very oversold market. And it's time to start thinking about buying stocks again once we see a rally. And we saw that rally right after Christmas, and it's been a really, really nice run ever since. And there are indicators as well. There are technical analysis indicators that are ideal for this type of market. Okay, so the point I'm trying to make here is not every indicator should be used in every type of market. And I'm going to show you guys examples. Now, you can take my word for it, or I'm going to show you some chart examples of how certain indicators will fail, okay, in different types of markets. All right, so real quick, what did you learn? What did you notice or want to share with the group so far? I'll give you guys a few seconds to answer. What did you learn? What did you notice or want to share? Alessandra says the MTI is awesome. Yeah, it's a great overall market trend indicator. Absolutely. Okay, Kent says not all indicators work in all situations. Okay, so that's something maybe Kent wasn't necessarily aware of. That's good. That's good. And Kent, maybe it's going to become even more clear here as I go through them, and you're going to say, you know what, you're right. I've tried to use this indicator in this type of market and failed, but maybe you didn't put two and two together, right? And wondering why it didn't fail. Yes, Steve. Steve says, looking at your last graph, do you see a sell indicator at the beginning of October of 2018? Yes, VectorVest did give a sell indicator in 2018. And once I get into the program, Steve, I'll show you that. Okay. All right. So I'm pretty sure. Yes. Awesome. Cynthia added a poll here. So I'm going to launch this poll. I like to kind of get a sense of who we have in the room. So the poll is, and you can officially see that poll, I think, on your screens now. Yep, you guys are answering. Which technical indicators do you use the most? And you can select more than one. Is it the MACD, support and resistance, stochastics, or you don't use any technical indicators? All right, so we're collecting responses here. I'm going to give you another maybe 15 seconds, excuse me, to answer. Okay. All right. I'm going to count it down. Steve says he uses the moving averages for a while, but too many buys and sells. Yeah, absolutely. Now use trend. Okay, good. Yeah, especially, Steve, when you shorten the look back, right, for moving averages, there are a lot of false signals and whipsaws. Uh, but I agree. Yeah, using moving average, especially here. How about this one? If you use a moving averages in a non-trending market, forget it. You're never going to get anywhere, right? Because moving averages, they're trending indicators essentially. So if you use moving averages, and this is what I'm talking about using certain indicators for certain markets. If you use moving averages in a trader's market, it becomes frustrating because you're just getting whipsawed back and forth. Steve says correct. He knows that. All right, I'm going to close the poll and I'm going to share it with you guys. And here's what you said. 72% use MACD or moving average crossovers. 78% use support and resistance. 38% use stochastics, and only 3% of you don't use any technical indicators. Well, the good news is I will be covering each one of these today. You're probably wondering, why is he asking me about these? Are you going to cover them? I'm absolutely going to cover them. Okay. All right, let me hide the poll. And okay, so let's talk about each indicator now. All right, so we understand the market, right? So that's the first thing you always want to have in the forefront of your mind is, what is the market doing? Okay, is it trending? You now know how to identify a trending market and how to take advantage of it. You buy the dips, you look for the market to hit higher highs, pull back, establish a higher low, and then stop going down, start going back up again, and then adding to your positions. A trader's market is a market that's non-trending. It doesn't hit higher highs, it doesn't hit higher lows, it moves in a channel, kind of bouncing back and forth between support and resistance. And then there are extreme situations as well, and I talked about how VectorVest observes and identifies those extreme situations. Now let's talk about the indicators. So one of the most popular indicator that you guys told me and use is the MACD. Stands for moving average convergence divergence. It has the words moving average in it. So the MACD is a trend indicator that identifies meaningful changes in a stock's price trend. Okay, so we're going to talk about using the MACD in a trending market. Makes sense, right? Another indicator we'll talk about is support and resistance. I just said earlier that there are times when the market's in moving in a channel, right? Essentially bouncing back and forth between support and resistance, retracing back and forth between support and resistance. Well, guess what? The best technical, or the ideal technical indicator to use in that type of market is support and resistance, where you have stocks that are exhibiting the same type of price behavior as the overall market is. And then probably my favorite technical analysis indicator, I live by it, it's called stochastics, the Stochastic Oscillator. A lot of you use it, and I forgot exactly the percentage, but the stochastics identifies overbought and oversold price situations. So when the market is behaving that way or exhibiting that type of characteristics, right? Overbought or oversold, the stochastics oscillator is the ideal indicator to use for that situation. So let's talk about the MACD. Here's a chart of the MACD. We're looking at APYX. This is a VectorVest chart, and I've added MACD to the bottom of the graph. The most common use of the MACD is when you see the histogram bars here go from below zero to above zero. Okay, I'm not going to get caught up in the calculation, guys, or the formula of MACD. If you want to know it, you can just Google it. Google MACD, you'll get the formula. But when the histogram bars, let me just do something here, make sure you guys can see my mouse. When the histogram bars go from below zero to above zero, that's a buying opportunity. That indicates a change in the stock's trend. Okay. So let's look at some examples here, some entry and exit examples using the MACD. Again, what type of stock is this? This is an uptrending stock, right? Higher highs and higher lows. Okay. So here on June 22nd of 18, you got an entry. So a few of you guys before were saying, Imre was saying entries and exits. That's one of the things Imre struggles with, entries and exits. And a few of you guys were saying the same thing. Tom says knowing when to exit. Well, with these indicators, it's pretty cut and dry. There's no questioning, I guess, what to do if you just follow the indicator. You get in when the histogram bars go positive. You get out when the histogram bars go negative. Okay, so on July 24th of 18, stock moved sideways there for about a few weeks prior, eventually broke down. The indicator gave us a sell signal on July 24th. Would that have been a good opportunity to take our gains off the table? For sure, right? We sit out. We sit out. The histogram bars stay negative. We wait for the stock to stop going down. Not only do we wait for the stock to stop going down, but what do we wait for? We wait for a bullish MACD crossover. Okay, and that occurred on August 24th. So technical analysis indicators are used to make sense of price action. It's harder to just look at price and determine entries and exits. If you're looking at candlestick reversal signals, it's a little different. But just looking at price, how do you really know that the stock is the downtrend is over or the pullback is over and a new uptrend begins? It's hard when you just look at price. That's what the indicators are for. So on August 24th, we got a buy signal. Nice opportunity, right? So a higher low was established. We get our buy signal. About a week off of the new high, week off of that top there, we get a sell signal, September 26th. So again, what type of stock are we in, right? Are we in a stock that's bouncing back and forth between support and resistance? No, it's trending, right? It's uptrending. So that's why the MACD is ideal. And I'm going to show you another example here in a moment. Steve says, I noticed you guys are using a 9-month time frame for your graph. Is this the ideal time frame? No, Steve. There's no rhyme or reason why I'm using a 9-month here. It's just I wanted to zoom in close enough to show you the entries and exits here. But 9-month to a year, if you're looking for trend, it makes sense. Okay, 9-month to a year, even as low as 6 months, I think. But for the reasons that I said, I wanted to zoom in here a little closer. All right, so there's our exit. There's our reentry. November 1st of 18, stock stopped going down, right? Established a higher low again, started to go back up. Just because price went up doesn't mean we enter. We enter because the indicator signaled an entry. All right, so the price went up for a little bit, then pulled back, right? Pulled back for about 4 days or so. Did the MACD histogram ever go negative? It didn't. So the indicator allowed us to stay in this trade long enough to see a profitable trade. If we didn't use the indicator, if we were just looking at price, you may have gotten bounced out for emotional reasons, right? You didn't want to take a loss. Maybe you wanted just to break even, but you saw price moving down and you got out. But the indicator, if you follow it, allowed you to stay in until another new high was established. What are we seeing? We're still seeing higher highs and higher lows, right? December 14, 2018 was our sell signal. Here was our buy signal. Here was our sell signal. Okay, so Emery says, what lengths would you recommend for the moving averages using the MACD? I'm using industry standard, 12, 26, and 9, Emery. That's the settings here for the MACD, 12, 26, and 9. So you're probably saying, well, okay. You showed us a great example, right, where every trade looked to be a winning trade, and you're probably thinking, well, that doesn't work for me. That hasn't worked for me, right? It's not that easy. Well, it's not that easy if you apply the same methodology for using the MACD on a stock that looks like this. This is a non-trending stock, right? This is a very volatile stock. Clearly not hitting higher highs. Sometimes it hits higher lows, but then it establishes higher lows and then lower highs. Not clearly different than the stock that we just saw. Now let's take a look at the same methodology, same entries and exits, and see how different it is when you apply the MACD to a stock like this. February 13th of 18, there's a buy signal, right? Well, March 20th, that's a sell signal. Then that looks to be like that would turn out to be a losing trade. Okay, we got a buy signal here on April 12th of 18. We got a sell signal on April 24th because the histogram bars went negative. That's another losing trade. All right, this one might have been a winner. All right, May 8th of 18, we got a buy signal. June 20th of 18, we got a sell signal. So that was a winning trade. July 25th of 18, we got a buy signal. August 15th of 18, we got a sell signal. So that was a losing trade. All right, so this was another winner here. So August 21st of 18 was a buy signal. October 4th of 18 was a sell signal. That's a winner. Okay. November 6th of 18, that's a buy signal. December 6th of 18, that's a sell signal. You can see, guys, right? So earlier I said we're trying to put the probability on our side, and when you use the MACD on a chart like this, on a stock like this, you decrease your probability of a successful trade. Okay, just look at the difference. You put them side by side. Again, we're using VectorVest graphs here that allow us to do that. You put the chart side by side. So going forward, when applying the MACD, just try to apply it on a stock that looks like APYX instead of a stock that looks like AVGO. And the proof is in the pudding there. The proof is in the examples that I showed on the how many winning trades you get compared to how many losing trades. Okay. Another very popular trading technique is to use support and resistance. Okay. One of the great things about the VectorVest tool is it automatically draws the support and resistance lines for you. So let's take a look at support and resistance here. Basically, a support level is where stock prices have stopped going down, they begin to go back up, and typically they do that on multiple occasions. It's where demand is deemed strong enough to push the price higher and support it from moving any lower. Resistance is a point where stock prices have stopped going up, they begin to come back down, and again, typically multiple times. It's where supply is deemed strong enough to push the price lower and resist it from rising any further. And support and resistance is the ultimate crowd mentality indicator. Think about it, right? Have you ever bought a stock and you watched it go up, but you didn't get rid of it? You didn't sell it. Why didn't you sell it? Because you thought it was going to continue to go up. Then what happens? It falls, right? It comes back down and you say to yourself, what? Well, you say, man, if it ever gets back up there again, I'm going to get rid of it. I promise. I'm going to sell it. Then when it does, when it gets back up to that level again, you sell it. Everybody else that bought it the first time that didn't sell it here winds up selling, and what does that do? That puts downward pressure on the stock's price, and it will begin to fall. Okay, so let's talk about how you use support and resistance in your trading. Number one, if you see price hitting support and bouncing off of it, that's bullish. That's a buying opportunity. Okay, price retracing from support is bullish. Price retracing from support is bullish. Retracing from support is bullish. That's a buying opportunity. The other buying opportunity is if price breaks out through resistance. Okay, remember, we talked about that built-in selling pressure at those resistance zones, right? Based on the crowd mentality. If a stock's price is able to overcome that selling pressure and bust through it, that's very bullish. And that's another buying opportunity. There are two selling opportunities or two shorting opportunities. Number one, price retracing from resistance. Price retracing from resistance. If you find yourself in a channeling stock, right, in a channeling stock that's moving sideways and no longer trending, and you're looking to pinpoint your entries and exits, you buy when it retraces from support, you sell when it retraces from resistance. You buy again when it retraces from support, you sell when it retraces from resistance. So a selling opportunity or even a shorting opportunity is when price retraces from resistance. The other selling opportunity or shorting opportunity would be, and we don't see this on the chart, would be when price breaks down through support. Breaks down through support. Okay, that's another selling opportunity. So here they are. Bullish, using support and resistance. You're bullish if price retraces from support or if it breaks resistance. You're bearish if price breaks support or retraces from resistance. Okay, and the last indicator we'll take a look at. So again, support and resistance. You just saw what the chart looks like, right, on an individual stock and the market. So the ideal indicator to use in a market that is channeling and no longer trending is sorry, my goodness, is support and resistance, because that's what the market's doing, and the market, makes up every stock that you're thinking about trading. So you're trying to play the averages. Okay. Now the other indicator we'll talk about is stochastics. It's an oscillator. It oscillates between 0 and 100. Overbought is above 80. Oversold is below 20. I'm going to only talk about the oversold situations and the buying opportunities. Okay. So here with Abbott Labs, would you agree that when the stochastics oscillator went below 20, that the stock was near a low point, right? Somewhere near a low. Not saying it was at the exact low or the exact bottom, but it was somewhere near the low. Just because stochastics goes below 20 doesn't mean that you buy it. That's kind of what's called a setup. All right. Setup is a set of conditions letting you know to get ready to enter the trade. The actual trigger is the situation that you see that tells you to enter the trade. So the trigger with stochastics is when the oscillator goes from below 20 to above 20. So how about that for an entry, right? A day or two off of the actual low. Good opportunity to make a few bucks there quickly, right? When the stochastics oscillator went from below 20 to above 20, below 20 to above 20, below 20 to above 20, and so on and so forth, okay? So now what I'm going to show you is how to maybe combine what you've learned so far. Jason says, are you using slow or fast stochastics? Slow and 14.3. Jason, that's the settings that we're using, 14.3 slow. So let's combine now some of the things that we've just learned. So on February 13th of 18, we got a stochastics crossover, right? Bullish stochastics crossover went from below 20 to above 20, we buy, okay? We're in the trade, great. What happens? Where does the stock stop going up? Whoops. Where does the stock stop going up? It stops going up at the same level that it stopped rising before. What is that now establishing? It's establishing resistance. At least two touches establishes resistance. Two touches at the same price level constitutes resistance, or support for that matter. So you have a stock now that failed to make a new high, excuse me, and then retraced from the most recent swing high, giving you what? Giving you an opportunity to exit the trade. So you bought it when the stochastics oscillator went from below 20 to above 20, but you're exiting when you see a retracement off of resistance. Again, combining what we've learned so far. April 4th of 18, what do we have? Well, we have a couple of things actually. We have stochastics crossing above 20, but where did the stock stop going down here? Well, it stopped going down at essentially the same level that it stopped going down back here in February. So you have a stochastics bullish crossover. You also have a support retracement. Now, what happens here is the stock doesn't really move up as fast as we want it to after we enter, right? So it moved up a little bit, and then what did it do? It started to come down. What did we say this level is now? It's support, right? What do we know about a trade that we're in if it breaks down through support? We know that that's bearish, and that's an opportunity to exit the trade. Well, did it? Well, did price break down through that support level? No, it didn't, allowing us to stay in the trade, right? Established a nice support level there. We got in when we had a bullish stochastics crossover. Stock didn't really go up as much as we wanted to. It pulled back, but we know there's support there to protect us if the stock continues to fall. It doesn't, and it allows us to stay in the trade. What do we have up at the top again? Remember, we have resistance, right? Well, guess what? Where did the stock stop going up here? In June of 18, it stopped going up at resistance again. It retraced from resistance, allowing us now to exit our trade at a nice gain. Here's another stochastics crossover on July 2nd of 18. Okay, we still have that resistance zone there. So what happens? Stock goes up, retraces from resistance sharply, and we exit. Now I know the stock busted through it, but we didn't know that that was going to happen, right? We want to make sure that we're following rules and not trading emotionally. So when you see resistance retracement, especially at a nice gain, you get out of the trade. Now what happens? Breaks through resistance a couple of days later. When resistance is broken and price goes above it, that level becomes support. And generally what you see is a retest of that zone. And we did. We got a retest of that zone. Now it's support. And what happens? A retracement off of support. A retest again of that zone and another retracement off of that support zone. Okay, another retracement off of that support zone. What do we have? We have two things here. We have a retracement off of support, and we have the stochastics crossing from below 20 to above 20. Nice entry there as well, right? So I'm just going through examples here. Not every trade is going to be a winning trade, but stochastics gives you a really nice opportunity. So again, here, November 28th of 18, our entry. December 27th of 18. Okay, so now you're saying, okay, I'm in the trade, and the stock only goes up for 2 days, but then it crashes for the next 2 days. What do we have here? Remember, we have that same level of, we have newly established support. 1 touch, 2 touches, 3 touches, that's support, right? So now what do we know? We know that if you're in a trade and it breaks down through support, good idea to get out of it, and what happens? Support holds, stock retraces, and it's allowing you to stay in the trade. All right. Can this information help you in your trading? Think about this question and think about some of the things that you're doing right now. And are the things that you're doing any different than what I'm showing you here? So can this information help you in your trading? If you use these indicators, but you're not having the success that you hope for, I think the answer is probably yes. You know, if you begin now to, Imre says most definitely, if you begin now to favor certain indicators in certain type of market conditions, it's only going to improve your odds. Okay, so the last piece to this puzzle is, okay, how am I going to find these indicators? Okay, you've taught me what to look for first in terms of the market. You've gone through which indicator to use in each market. Now we got to figure out how we're going to find these trades. There are 3 ways to do it in our view. There's the 1-by-1 method. That's where we're going to be looking at chart after chart after chart. I'm going to go through it here in a moment. Then there's using a scan, all right, a search that filters through all of the stocks, all the potential candidates, and narrows down that list. And then there's automatic alerts where you set up a system to have it tell you when a stock meets the criteria that you're looking for. So here we're looking at the VectorVest 7 this is our program, VectorVest 7 real time. Okay, so I'm going to go through each one of those methods with you. Let's start with the 1-by-1 method. Now this is the slowest method. It's doable. It's just slow and very time consuming. So I'm going to go into what we call the viewers, and I'm going to open up a watch list that we have called the S&P watch list, and I'm just going to select the S&P 500. A lot of you folks like to trade S&P 500 stocks. Why not? Great stocks. So we're looking at all 500 stocks in the S&P 500, but we're looking at the best ranked by our master indicator, VST. VST stands for value, safety, and timing. So the stocks at the top of the list have the best combination of value, safety, and timing. Okay, I'm going to graph them. Oh, well, first, hold on. Very important. I missed a step, right? What's the market doing? What's the market doing? So I'm going to go to graphs, and I'm going to go just looking at, this is the VectorVest composite up at the top. Same price chart that we were looking at earlier, but this is in our program now, the VVC. And I'm just going to look at a 3-month, look at a 6-month chart, and I've added stochastics at the bottom of the chart. Harry says, Jerry, does the VST indicator update in real time? Yes, it does. If you have our real-time program, we have an end-of-day platform as well, which you have no ticking real-time data. But yes, if you have real-time, VST does update in real time. So what did I do here? I added stochastics to the price chart of the VectorVest composite. Yes, Mark, it is. Mark says, is it possible to import a list of stocks determined fundamentally, then screen for technicals? In essence, yes, Mark. You can screen for both fundamental and technical indicators in one screen within the VectorVest program, okay? So real quick, guys, what I did was I added the Stochastic Oscillator to the VectorVest composite. Remember, let's pair the market with pair stocks with the market's doing, or pair indicators with the market's doing. So with the fact that the Stochastic Oscillator on the VVC has just recently crossed above 20, okay? Just recently crossed above 20. I want to scan for stocks today, right now, whose stochastic oscillator has just crossed above 20. How about that, right? Does that make sense, right? Logically, if the market stochastics, and this is the VVC, if the VVC stochastics is just crossing from below 20 to above 20, let's go and find stocks that are doing the same thing. Okay, so I almost forgot to look at the market first. So that's what we're going to do. We are going to go back to that list of S&P 500 stocks, and I'm going to graph them all. I'm going to click on this Graph All button at the top. And I don't have to look at a one-year graph here because it's the current time that I'm looking at. I'm looking for stocks. Let me just take off a few indicators. I'm just going to take off volume and take off these moving averages, and I'm just going to look at stochastics right now. So with INTU, let's ask this question. Is the stochastic oscillator first crossing from below 20 to above 20 today? The answer is no, right? It's actually above 80, so it's a little overbought right now. When did it first cross from below 20 to above 20? Back here in December. That's the ideal entry, right? So using the stochastics indicator, this is not a viable trade for us today, okay? This is not a viable trade for us today using this indicator, okay? I'm going to move to the next stock. Is the stochastic oscillator today crossing from below 20 to above 20? No, it's not. How about CDNS? No. Oh, okay. Well, we got one, I think. Salesforce, CRM. Did it first cross from below 20 to above 20 today? No, it actually first crossed yesterday. Okay, right? First cross from below 20 to above 20 yesterday, and it remains above 20 today. So look, there's a lot of upside here. I don't think you're too late to the party. But did it first cross from below 20 to above 20? No. Not to say that I wouldn't buy it, but we're looking for that initial crossover. No, it didn't, right? This is progressive. Did this one? No, it actually happened a few days ago with TDG. First cross from below 20 to above 20, okay? Again, not that you're so late here, but we're looking for that first crossover. I'm going through one by one, one by one, one by one. Still just crossed yesterday. Still, probably not too late, but we didn't find that first crossover. So you can see, okay, you can see how long this is going to take you to find stocks whose today stochastics is first crossing from below 20 to above 20. Take you a while. You're looking at 500 stocks. So far, we really haven't found any that today it crossed from below 20 to above 20. So that's the one by one method. It's doable. It's a little time consuming. A faster way is to use a scan. So I'm going to go in what we call the Unisearch tool. This is our scanning search engine. And we have a tool within the VectorVest real-time program called ProTrader. It's a technical analysis scanning tool. You can scan for moving average crossovers. You can scan for MACD. You can scan for ADX and all four of the support and resistance criteria that I talked about, retracing from support or retracing from resistance. We have a search in the ProTrader tool, finding stocks whose stochastics is crossing above 20. and I'm going to add a one-line parameter to it. I'm only going to look for stocks in the S&P 500. If I were to run this search right now at 12:46 p.m. Eastern Time, I'm looking at all 8,134 stocks that we currently track in the VectorVest program. I don't want to do that. I just want to look at the S&P 500. So I'm going to just quickly, and this is all doable. Don't worry about the keystrokes here, guys. I'm just going to show you that I'm going to use that S&P 500 watch list. Okay? And I'm going to run the search. Watch how easy this is. Watch how fast this is. There you go. Right now, as of 12:46, here are all the stocks in the S&P 500. And going back to, I think it was Mark, ranked by VST. So these are all the best stocks in the S&P 500 based on our value safety timing indicator. And let's graph them. Let's graph them. Perfect, perfect, perfect. What do we have? We have FTNT. Did the stochastics oscillator today, right now, first cross from above 20 to below 20 to above 20? The answer is yes. Wow, look at this one. AOS. Did it first cross? So you can see the value of stochastics looking at %K. Did it first cross from below 20 yesterday to above 20 today? Yes. Right? So you could have gone through all 500 S&P 500 stocks. You would have found these, but it would have taken you a little while. Okay, and you can clearly see how easy that is and how fast that is. Okay, now you may or not be aware. I'm sure you are aware because this is a dual webinar, right? Interactive Brokers and VectorVest have teamed up to do this webinar. Not only have we teamed up to do this webinar, we have teamed up so that IB clients and VectorVest clients can trade stocks directly through the VectorVest program to your Interactive Brokers account. In the past, guys, with VectorVest, what you had to do is you had to have both opened at the same time. All right, VectorVest and Interactive Brokers. Now there's seamless integration between the two. So let me show you how to do it. Let's say, all right, I like all of these, but for FTNT is actually down today, right? You see a red bar here today. It's actually down today. I don't like to buy stocks that are falling in price the day that I buy it. Even though I got a bullish stochastics crossover, the stock is falling today. I like AOS better. So I like AOS. I want to buy AOS. So let me show you how to do it. We have a feature up at the top here in the graphs called Trade Now. I'm going to select Trade Now, and I'm going to select, for all intents and purposes, and the purpose of this demonstration, I'm going to use my paper account that I have, my Interactive Brokers paper account that I have linked here to my VectorVest platform. I'm going to click on Interactive Brokers paper. It pulls up our trade ticket. Here's where you fill out the trade ticket. I know my action is I want to buy it. Within this trade ticket, you could also sell stocks, you can sell short, you could buy to cover. I want to buy it. All right. I want to buy, let's just say 50 shares of AOS. My order type, I can enter in a market order, a limit order, a stop order, or a stop limit order. For this demonstration, I'm going to select market order. I'm going to select preview. It gives me my total estimated commission at the bottom. And if you're an IB subscriber, you know how low and commissions are. So here I'm only paying $1. My total estimated cost is $2,580. And I simply have to click on place orders. The order is sent to the brokerage, and you'll get a message that sent to IB, and it says your orders have been successfully submitted. Please close this window to view an updated order status. You click on close, it brings you back to the order ticket. Here's the status. It's still pending. It's awaiting execution, and I'm going to wait here until that status changes, because any minute now or any second now, it'll say executed. Okay. Now, using this feature here, the Trade Now feature, the order is sent to the broker. sent to your IB account, and executed. And this process requires you to go to your Interactive Brokers account to see the status. There we go, executed, there we go, executed, and a fill price of 51.57. You now have to go to your IB account to check on the status and the performance, essentially, of this trade. Let me show you another way within the VectorVest program where you can actually track, excuse me, track this trade. I'm going to click on close. And again, I'm using paper, so I'm just going to go ahead and buy it again. Watch what I do here. I'm going to select the same trade now, but I'm going to select an item up at the top here that we have within VectorVest called Robo Trader. I'm going to select Robo Trader, and it says choose an account. Okay. I'm going to choose my Interactive Brokers account. I'm going to select next. I've created a portfolio for this webinar called Demo. Okay. I'm actually going to not only trade AOS, but I'm going to put it into a portfolio so that I can track it moving forward. I'm going to select next. My action is going to be buy. And let's say I want to buy, what we're doing now, we're not, and it says spend. So we're not typing in shares here, we're typing in a dollar amount. I want to put $10,000 into this trade. Okay. You can also choose any of the stop criteria, the sell criteria that VectorVest has within the program. For purposes here, I'm just going to select none. I want to buy it. I want to click next. Same order ticket, right? But the Robo Trader is smart enough to fill in the data, fill in the numbers. I already told it I want to buy. I told it, guys, that I wanted to put $10,000 into this stock, so it knows to buy 194 shares of it. I can change my order type here, market limit, stop limit, stop order. I'm going to select market. I'm going to click preview. My estimated cost, my estimated commission is still $1. My estimated cost is $13.34. See how smart this tool is? It says buy AOS, possible duplicate order. It knows that I already bought it. Again, this is paper, so it's not, I'm not messing anything up. But if you happen to buy it again, it'll tell you, it'll give you an alert that it's possibly a duplicate order. Watch this. I click on place orders. It's going to give me that same message that the orders have been submitted successfully. And if I click on close here, cancel here, let me go to the Robo Trader tool. And here's that Robo Trader portfolio. Here's one order pending. Okay. Here's an equity curve. Now, here are my holdings. I don't have any holdings yet. The order is still pending. Watch what we see here when that order is filled. There you have it. It's now filled. Whoops. And here, right within the VectorVest tool, right within the Robo Trader tool, you can track the trade. Here's the company, the symbol, whether you're long or short, the purchase date, the quantity, your cost per share, the current price, your return on investment, the dollar change and the percent change in price from the previous day's close, your gain in dollar amount, and then you can look at some VectorVest analysis where you can look at the current relative timing of the stock, the current VectorVest rating, it's a buy, your gain per share, the cost basis, your market value, how many positions you have, what sector it's in, and if you're using stop criteria, you could see the stop criteria right from here. Okay, so before the process that I walked you guys through before, you could still trade stocks through VectorVest into your Interactive Brokers account using the first method. But this method here allows you to actually now keep track of the trade within the VectorVest program. So let's do another one. Let me show you. Let me just show you what happens here. I'll do another one real quick. So PKI, I like this one as well. It's up today. We know that the stochastics crossover. I like this one. I want to trade it as well. So I go Robo Trader, Interactive Brokers. I'm going to put it in the same portfolio. I'm going to buy it. I want to put the same dollar. I'm going to dollar weight it. I want to put the same amount of money into it. So I'm going to put $10,000 into it. Click next. It knows to buy 106 shares of this stock. Click on preview. Click on place orders. And that's it, guys. You're done. Click on close, close, cancel. Let's get back to RoboTrader. Notice another order here. Another order. It's still pending. It hasn't executed yet. Let's go to holdings. Let's sit and watch until it is executed. And when it's executed, it'll place it into this portfolio. Put it right underneath AOS, I believe. So again, still pending, not quite executed yet. There we go. So it disappeared, and there it is. Whoops, there it is. Same information. Now you're able to track both stocks. And it's very easy to sell it. Sell each stock. All I need to do is right-click on it. Right-click on it. If I want to get rid of the position, I click on Close Position. It brings up that order ticket again. The action is sell. Now, I don't have to sell the whole position. I can just say, I want to sell half of my position. I'll type in 97 shares. 97? No. 97 shares is half of 194, right? Yeah. 97 shares if I want to sell half. You could sell the whole thing, but it's very flexible right here within the RoboTrader tool. Okay. We use this tool, by the way, guys, quite a bit in an upcoming course that we're teaching called Trade Like a Pro. We teach some different professional traders systems, professional traders techniques. What I want to do now is I want to give you guys my email address. Ray, if you don't mind, Ray's going to type in my email address in the chat box so you can just write it down, or you can click on it, I believe. And if you have any questions about anything, guys, that I just went through here today, about technical indicators, about the market, about the RoboTrader tool, about the Trade Now feature, or that upcoming Trade Like a Pro course that we're teaching, that we start next week, which again, we use RoboTrader quite a bit in, email me, Jerry D, that's Jerry, D as in David, at VectorVest.com. Jerry D, Jerry, D as in David, at VectorVest.com. Just shoot me an email about anything that we went through here today. So guys, you showed up today because you maybe feel like you're missing out on the current market. Maybe your trading plan isn't working or performing like you wanted to. You just wanted a better, faster way to find trades. So you learned today to match the market to your indicator, to effectively use popular technical indicators, and to quickly and easily find trading opportunities. Imre says how to set up automatic alerts for indicators. Let me show you really quick how to do that. I apologize, I didn't get to that. We have another tool within the VectorVest program called the Watchdog. So right now, the Watchdog allows me to scan for either MACD or support and resistance. Okay, so let's say right now, for all intents and purposes, I want to find stocks that have today, right now, in real time, a MACD crossover. So if I just click on new, I'm going to create a new Watchdog here. I'm going to select MACD. We're going to have the MACD crossing above the signal line. Click next. I also just want to look at the S&P 500 watch list. And I want to look for stocks in the S&P 500 that have a price greater than $5, average volume greater than 250,000 shares. You can change both of those filters. Click next. I'll just use this Watchdog 1 name, and that's it. You click finish, and you are now subscribed to that Watchdog. No current results yet, okay? Because now what the Watchdog is doing is it's scanning all the stocks in the S&P 500 that moving forward right now, 1 o'clock Eastern time and on, it's looking for stocks whose MACD is first turning bullish right now in real time, Imre. So that's how you set it up. And if you need any help, you can always call our support department, and they'll walk you through that very simple process. But notice, let me go to this one. I'm already subscribed to this one. And here's another MACD, bullish MACD crossover. And here today, So the last bullish MACD, 11:59. Yeah, so the last bullish MACD crossover alert that I received was on CMCSA at 11:59 a.m. this morning. When CMCSA's MACD first turned bullish, it happened at 11:59 a.m. this morning. If I right click, if I view the graph, oh, I'm sorry, and it tells you the price, $39.51. So CMCSA met the criteria at $39.51. That was the price of the stock at 11:59 when its MACD first crossed. It's about 4 cents or 5 cents higher now. It's $39.55. Okay, so a really cool tool here. You set it up. You don't have to be glued to your computer either. Okay, when you set that up. So the big lesson here, guys, is technical analysis can help anticipate future direction, and you can find great trading opportunities, especially if you use the power of speed instead of doing it the one-by-one method. So I want to thank everybody for joining me here today. I had a great time. Hope you guys did. I'm going to turn things over to Cynthia so she can kind of wrap things up. So have a great day, everybody. Talk to you soon.
Well, Jerry, and also I want to say a big thank you to Ray, who's working in the background with your questions.
Absolutely.
Now, that is going to conclude our session today, but I want to remind you that we have been recording today's event, and each of you will get a direct link to today's recorded playback soon after the session ends. So if you do want to come back and review the concepts that Jerry was discussing today, simply watch your email. By the way, Jerry, thank you for giving us your email address. I'll also be including that in the follow-up messages.
Right.
So with that, I'm going to take control here. I also do want to mention that you'll notice, let me make sure, let me take the controls back. And I do want to point out, I've got contact information. If you do have, for my colleague, Willie Katz, if you've got any questions about trading with Interactive Brokers, and also I will be putting Jerry's email address in if you've got any further questions on all of the wonderful tools that he did show us here today. So with that, we are going to conclude our session. I want to thank all of you for participating in today's session as well. You can all exit using the X in the upper right-hand corner of your screen. And do watch your inbox for a follow-up to today's session. So with that, thanks everyone. Have a great rest of your day all. We'll see you next time.